Welcome back to another modern day trader review with your boy Marcy. What's going on, guys? What's going on? I think this is week number 8, and today we're going to take a look at how I achieved 100% win rate. As you guys can see, the charts are on the screen. So without further ado, let us just jump straight into the charts. Guys, no shit, 100% win rate, a total of 2R in the markets this week. Really good week this week, considering that pound had so much news, so much news this week. Anyway, let's just jump straight into the charts. So when I got to the charts on Monday, what you can see is that the previous day, which was Friday the 3rd, was bearish. And so I was anticipating initially that there's potential sell-offs. Now, when I did my analysis over the weekend, I was kind of anticipating the price action could come into this area here, this order block, and potentially bounce off from this order block to continue to the upside. So with that in mind, what I needed in order to buy it was 4H correlation across the pairs, or I need a 4H confirmation that price action is going to the downside. When I jump down onto the 4H time frame on Monday, what you can see is that the Asian session closed bullish, and the good thing is that with this 4H closure, we had a break above these areas here. After a big impulsive move to the upside, I'm anticipating exhaustion and price action to correct itself, pulling back into these highs potentially. So when I saw that this Asian closed pretty bullish with a lot of momentum to the upside, I knew that there is potential that I could take these buys, but I needed the 4H correlation across the pairs. So let's jump down into all the pairs. So when we come into pound USD, what you can see is that price action on the 4H had closed the 4H bearish. And what that means is that we don't really have a good sentiment for pound specifically. So what that means is that the one pair is bullish and the other pair is bearish. So I can't necessarily say whether pound is strong or weak. I don't know what's exactly going to happen with pound. So what I'm going to go through is all the yen pairs and just determine what the market sentiment is in the yen pairs. So we go on to Euro JPY. What you can see is that Monday the 6th at 3 o'clock, or the 7 o'clock close coming out of Asia, we have a bullish candle, signaling to me that there's potential yen weakness in the market. Let's go on to CAD JPY. So what you can see is CAD JPY closed strong bullish. So that means yen weakness. Jumping onto USD JPY, exactly the same, and then AUD JPY, exactly the same. So with that being said, we have a mixture of sentiment on pound. However, we know exactly what could potentially happen with yen. So I'm expecting continuation of weak market sentiment for the yen, and with that being said, we're anticipating buys for GJ. So what do? You start scaling down on the 15-minute time frame, and you start anticipating breaks above certain areas in the market. Now this one was a bit tricky because initially I was looking for buys above this area, and what you can see is that at London Open we had a big bullish push to the upside. Now the reason why I didn't really take this trade after this bullish push to the upside was the fact that the 1 minute initially pushed up first. Now what I need for the next candle, once the next 15-minute candle opens, I needed to pull back first, meaning on the 1 minute we're getting bearish candles in this example, and then it pushes to the upside afterwards. However, price action pushed up first and then pushed down, and then as you can see, it actually closed doji. It actually closed as a doji, but it was a yellow candle, meaning it was bearish. What you can see is that the next candle right here closed above these 15-minute levels that it created now. And that's when I started anticipating buys. Now, where did I anticipate buys? I anticipated buys above these 15-minute levels, which is at 193351. So what that means is that my buy stop is going to go roughly at 370. So if we just go back to that time, it's around 10 o'clock. So what you can see is that this was the doji candle right here. We then had the push to the upside, and then subsequently setting my buy stops at 193.370, and then my stop loss at 193.140, below these previous 1 minute lows, higher lows in the market. And you can see that these swing lows are actually what created this swing high. So when I was entering above here, I knew that my stop was quite big, being a 22 pip stop, 23 pip stop, and then going for a 1-to-1 for a 23 pip TP, placing my TP at 193,600, and the rest is really history. Now what you can see is the price action pushed to the upside. We then moved down, and we were in this trade for a really long time, quite a long time, all the way till 4 o'clock, so more than 6 hours, bare minimum more than 6 hours. And you can see that price action actually had quite a deep drawdown on this particular trade and then pushed to the upside and contributing 1% to my equity curve. Let's jump onto the second trade. Jumping onto the second trade, I think the second trade was taken on Wednesday. Yep, I'm correct. And I have to mention this. I actually made a mistake in this trade, because if you take a look at the daily time frame, what you'll be able to see from the daily time frame is that Tuesday, the previous daily candle, actually closed bullish. And then when you jump down onto the 4H time frame, you can see that the 11 o'clock candle closed bullish too. And the reason why I didn't trade this 7 to 11 o'clock candle was the fact that there was news at this point. I think it was CPI or something, so I can't really trade when there's any news. So I traded the next 4H candle on Wednesday, and what you can see is that this 4H candle closed bullish. And if I just go through all the other pairs to anticipate what the market sentiment is giving me, you'll be able to see that we actually had 4H correlation. So I was supposed to go for a 1 to 2, but I think at this point at work I was just too busy, and I only thought that I only had 4H correlation, and I don't know why I thought that. But then hence me going for 1-to-1. But what I realized is that if I didn't go for a 1-to-1 in here, it wouldn't have been 2% return for the week. It would have been a 1% return for the week, with my trades being a 1-to-1 winner and then a break-even trade. However, let's go through correlation. What do we have on pound USD? So we have pound USD being bullish. So what that means is we have a strong pound at this current moment, and there's a high chance that the next 4H candle could show us that pound strength, right? Jumping into Euro JPY, what you can see with Euro JPY Wednesday, the 11 o'clock open, or the previous candle, what we have is a strong close signaling to me weakness in the yen. Now what do we have? We have CAD JPY, strong bullish close at 7 o'clock. What you can see is weak yen. Once again, strong bullish close, weak yen, and then at this point, unfortunately, weak bearish close. But what we do know is that we have 4 pairs from the yen side that says we bullish, or we have a weak yen, and then we have the pound also saying we have a strong pound. So with that being said, now when you get into the day, you can start anticipating that the next candle, the next 4H candle, has a higher chance of it pushing bullish than it does pushing bearish. All you need to do is go onto the 15-minute time frame, find the area in the market where price action can either bounce off from or break out. And what you can see is that we found an area in the market in and around, I think, 11-12 o'clock. We created an area in the market where we failed to break above for some time. Then we had a break above that area at about 12:45, the 1 o'clock close. And all I did at this point was anticipate that price action could potentially push to the upside. Now what you can see is that price action actually came down first, creating this baby wick, then triggered me in, and we were in drawdown for a long time. Price action only hit my TP at 8:30, which was absolutely ballistic. I think the reason why we had so much slower movements in New York this week, or even in London, was due to the fact that it was so news heavy, and the news and the high impact news obviously has bigger movements, which thus resulted in this case in very choppy markets outside of news times. And that's generally what happens, and that's the way I got 100% win rate for this week, guys. Now, if you like this content and you liked my strategy and you like the information that I've brought across with this particular strategy, don't forget to hit the like button and comment down below exactly what you want to know from my trading strategy, or even how you trade, so that maybe I can learn a couple things from you guys. And then don't forget to subscribe. And from your boy Marcelino at the Modern Day Trader, don't forget that your unmatched perspicacity, coupled with your sheer indefatigability, makes you a feared opponent in any realm of human endeavor. Peace out, man.